Okay, students, let's start our very first class of taxation revision. Students, a very important point is in taxation paper, live revision classes attendance is, I would say, necessary. Please do not skip these classes because within these live revision classes, we are going to complete the entire taxation. So we'll be discussing each and every rule of taxation. So please do not skip even a single class. Plus, obviously, these live revision classes, they will also give you the opportunity to clear your concepts, doubts. Obviously, you can ask in the WhatsApp group as well. But simply do not miss these live revision classes. And in the live revision classes, we will follow the same sequence in which there are pre-recorded lectures. Okay. So we are starting. Number one, you people are studying Finance Act 2023, which is still valid for December 2024, and it is valid for March 2025. Okay. So still Finance Act 2023 is valid for the next 2 attempts. Let's start the revision of basic income tax calculations. Obviously, individuals, they have to pay tax, as well as the corporations, they do pay tax as well. So the first question is that every individual in UK, so there's one question. No. Let me tell you, please. Actually, Finance Act 2023, it actually starts from 6 April 2023. This Finance Act actually ends on 5th April 2024. That is tax year 23-24. Now the question is why it is not 24-25. Now please listen. We are in 2024 and we are studying Finance Act of 2023. So Finance Act will always be 1 year before the current year. If the current year is 2024, so your Finance Act is 2023. For example, when there will be 2025, when the year will be 2025, logically you will be studying Finance Act 2024. Is this clear now? Why it is still 23-24, even though the Finance Act is still valid till March 2025. So the logic is, if your current year is 2024, your Finance Act is going to be 2023. I hope that doubt is clear now. Please reply. Students. So we will be yes, obviously. Your exam is according to the Finance Act 2023. Yes, it is according to the Finance Act 2023. Clear? Okay, the doubt is clear. That's great. So that is the benefit of these live revision classes. You can clear all the doubts. Okay. Now look, first, a very basic question is that does every individual is going to pay tax in UK? The answer is no. Only those individuals, they are having income more than personal allowance. Personal allowance is 12,570. So if someone is earning more than 12,570, so only excess than personal allowance is taxable. It means that if an individual is earning less than 12,570, obviously it's not required to pay tax. So only those individuals will be paying tax in UK. They are earning more than the limit of personal allowance. Okay. Every individual gets this personal allowance, but personal allowance is available on the basis of tax year. Personal allowance is not available on the basis of sources of income. For example, if someone is having non-saving income, saving income, and dividend income as well, personal allowance will be there. There will be only one personal allowance on the basis of tax year. So individual gets personal allowance 12,570 on the basis of per tax year. Now, how individual is going to pay tax in UK? It actually depends on the source of income. For example, if individual is earning from non-saving income, if individual is having a non-saving income, so the tax rates are different. If individual is having saving income, obviously then tax rates are different. If individual is having dividend income, then the tax rates are different. Basic rate band is from £1 till 37,700. Applicable tax rate is 20%, 20%, and 8.75%. And let me please also tell you one thing. These tax rates will be given to you in exam as well. Higher rate, $37,701, then it actually goes till 1,25,140. Applicable tax rate is 40%, non-saving 40% for saving, but for dividend it is 33.75%. Additional rate 1,25,141 plus above. Then applicable tax rate is 45, 45, and 39.35. Okay. Now, what are the examples of non-saving income? Non-saving income, for example, employment income. Employment income is a non-saving income. Employment income is a non-saving income. Property income, non-saving income. If you are a sole trader and obviously you are earning trading profit, so simply your trading profit is a non-saving income. Even the pension income is a non-saving income. Pension income also falls in non-saving income. So basically, if someone is earning employment income, that is a non-saving income. If someone is having a property and given that property on rent, so that property income is a non-saving income. Trading profit is a non-saving income. Pension income is a non-saving income. These are the few examples of non-saving income. For saving income, it is very simple. How to identify which income is saving income? Simply, interest income falls, we consider interest income as saving income. Simple. Interest income is the saving income. And we know that dividend is dividend. There's no, I would say, ambiguity. So saving income means simply interest income. Now, first of all, how do we apply tax rates? And let me tell you, this is the first live revision class. I think we have already shared the topic. The topic was basic income tax calculations. Before every live revision class, admin is going to share the topic so that you should know in advance what exactly we are going to discuss in the live revision class. So it is highly advisable that before that, before the live revision class, you should have seen all the videos so that you should come up with the queries, with the doubts, so you can clear each and every doubt. Now, how do we apply these tax rates? Before going towards that, when it comes to saving income, there are few additional rules relating to saving income. In case of saving income, number one, if individual is a basic rate taxpayer, individual, if individual is a basic rate taxpayer, then that individual gets nil rate band of £1,000. Second, if individual is a higher rate taxpayer, if individual is a higher rate taxpayer, then that individual gets nil rate band of £500. Finally, if an individual is an additional rate taxpayer, if an individual is an additional rate taxpayer, then there is no nil rate band in the saving income. Okay. In the saving income, there's one more rule of starting rate band. When do we need to apply starting rate band? What it is? Just wait, we are going to discuss. Starting rate band from £1 till 5,000. The tax rate is 0%. So we do have 4 additional rules for the saving income. Now, dividend income. Students, when it comes to dividend income, every individual, irrespective of taxpayer status, every individual gets the nil rate band of £1,000. So dividend income, every individual gets nil rate band of £1,000, every individual. Okay. Now let's try to apply the tax rates. Assuming, let's say we have employment income. I'm assuming the employment income is 60,000. Saving income is 15,000. Dividend income is 5,000. And there's one more information, pay as you earn. Actually, pay means the tax which individual has already paid in advance. Normally, when someone is an employee, so normally I would say normally it happens when employees they get their salary, they do get their salary after the deduction of pay as you earn. So pay as you earn means the tax which individual has already paid in advance, assuming the pay is 8,000 required. We have 2 requirements. Number 1, I need income tax liability. Second, I need tax payable. So please, I want everyone to attempt this question. I'm giving you 4 minutes. Then obviously we are going to solve together as well. But please, whenever I'm giving you the time to solve, so do attempt this, please. Everyone try this. Okay, let's see what students are sharing. Okay, 10,582 tax payable. What about others, please? One student has given the answer. What about others? Please take 1 more minute and then we will solve together. Okay, students, let's try together. Now, students are getting the same results, and we are studying UK taxation. In UK taxation, results, everything should be in pound sterlings, pounds, not in dollars. Okay, it has to be in pound sterling. I think I have used the sign of pound sterling. Okay, let's solve together. It's good to see that majority is having the same result, but we have to identify is it correct or not. Okay, whenever we need to calculate income tax liability, so the sequence is first always non-saving income. So first we have to apply the tax rate on non-saving income. After that, we'll go towards saving income. And finally, dividend income. Finally, we go towards dividend income. Okay. Employment income is we know that employment income is your non-saving income. 60,000. Obviously, when it says saving income, so it's saving. Interest income is saving income. 15,000. Dividend income is 5,000. So student total is 80,000. Personal allowance. First, personal allowance will be deducted from the non-saving income. Obviously, if you don't have non-saving income, then we'll go for saving. And finally, we go for dividend income. Personal allowance. Always it is first deducted from the non-saving income, which is 12,570. After deducting the personal allowance, you will get taxable income. So 60,000 minus 12,570. I'm getting 47,430. 15,000, 5,000. So the total is 67,430. Okay, now when we apply tax rates, so always first you have to apply tax rates on non-saving income. Then we go for saving and finally dividend income. Income tax. Non-saving. Obviously 47,430 is more than the basic rate band. So the limit of the basic rate band is 37,700. Applicable tax rate is 20%. So let's take 20% of 37,700. That is 7,540. Now we have actually consumed the basic rate band. We have utilized the basic rate band. Now we'll go towards higher rate band. From 47,430, we will deduct 37,700. Whatever comes, that will actually fall in higher rate band. So 47,400 minus 37,700. What are we getting? 47,430 minus 37,700. I'm getting 9,730. Now applicable tax rate is 40%, and obviously we are applying this on non-saving income. We are applying this on obviously non-saving income. Okay, so let's take 40% of 9,730. I'm getting 3,892. I'm getting 3,892. So we have applied the tax rate on non-saving. Now we'll go for saving income. Before applying the tax rate on saving income, number one, you have to check individuals' tax paying status. How do we check that? Because we know that if an individual is a basic rate taxpayer, will get nil rate band of 1,000. If individual is a high rate taxpayer, will get nil rate band of 500 for the saving income. If individual is an additional rate taxpayer, then individual will not get any nil rate band for the saving income. So how do we decide the taxpayer status? Please always, it is decided on the basis of total taxable income. Look at the total. You have to see the total taxable income in the column of total after personal allowance. I'm getting 67,430. Can I say 67,430? It is more than the basic rate band, because the basic rate band limit is just 37,700. So obviously 67,430, it is more than the basic rate band, number one. And number two, 67,430 is not exceeding the high rate band, because the high rate band ends at 1,25,140. So number one, the total taxable income, it is more than the basic rate band, and second, it is not exceeding higher rate band. So we are saying this individual is a higher rate taxpayer. Since this individual is a higher rate taxpayer, will get nil rate band of 500 for the saving income. So nil rate band, saving income 500 into 0%, of course 0. So from 15,000, we have taken 500 into the nil rate band. So the remaining 14,500 obviously falls in high rate band, because basic rate band is already utilized, already consumed by the non-saving income. So once one band is utilized, consumed, it is consumed for each and every other income. So basically, non-saving income has already consumed the basic rate band. Okay. So we have 15,000 saving income. Out of that 15,500 falls in nil rate bands. Remaining 14,500 of the saving income obviously falls in high rate band, where applicable tax rate is 40%. So 14,500 into 40%, I'm getting 5,800. Now dividend income, we know that every individual, irrespective of the status of taxpayer, can I say every individual gets nil rate band of 1,000 pound. So simply dividend income, we are having nil rate band, 1,000 into 0%, obviously it is 0. Out of 5, 1,000 we have taken in nil rate band, so the remaining amount is 4,000. Obviously, the remaining 4,000 falls in higher rate band because basic rate band is already fully utilized. So dividend income, 4,000. Higher rate band dividend income applicable tax rate is 33.75%. And let me repeat, these tax rates, they will be given to you in exam. 4,000 into 33.75. I'm getting 1350. So 7,540 plus 3,892 plus 5,800 plus 1350. Students, I'm getting 18,582. This is your income tax liability. Income tax liability. The tax which is already paid in advance, we have to deduct that. Pay as you earn. The amount of the pay is 8,000. So here comes your income tax payable. $10,582. So I hope everyone has everyone is having the right answer. Great. So income tax payable is 10,582. Okay. Now, assuming employment income is 15,000. And let's say we have interest income. We know that interest income is the saving income. Let's say the interest income is 20,000. Okay. We do have dividend income as well. Let's say the amount of the dividend income is 5,000. Required. Income tax liability. Please, I want everyone to attempt this question. Whatever you think is right, please do attempt this. I'm giving you 5 minutes. Please attempt this. Okay, let's see what is the answer. One student is saying 4122. Let's see what about others. I'm giving you 1 more minute and then we'll be solving together. Okay, second student is also having the same answer. Let's see. Let's solve it together. Again, the 3 columns. Great. That is non-saving, saving and dividend income. Then we have total. Okay. Employment income, obviously, we know that employment income is a non-saving income, 15,000. Interest income is 20,000. Dividend income is 5. So total is 40. Total is 40,000. Obviously, we'll deduct the personal allowance from the non-saving income, 12,570. Taxable income. 15,000 minus 12,570. I'm getting 2,430. Saving income is 20. Dividend income is 5,000. I'm getting 27,430. Now let's calculate income tax. Obviously, first we have to apply the tax rate on non-saving, and taxable income in the column of non-saving is only 2,430. Non-saving 2,430 and obviously 20%. 2,430 and 20%. I'm getting 486. Now, students, you have to please properly understand the very important concept rule which I'm going to discuss right now. Please look at this. In the column of non-saving, taxable income means after deducting the personal allowance. In the column of non-saving, taxable income after the deduction of personal allowance is 2,430. And obviously this 2,430, it is less than 5,000 pounds. Since your taxable income in the column of non-saving, it is less than 5,000 pounds, it means that still starting rate band, not entire starting rate band, but some part of a starting rate band is available. Means your non-saving income logically has not consumed your starting rate band. So simply from 5,000, we will deduct 2,430 starting rate band for the saving income. Still, how much is unutilized? It is 2,570. So whenever in the column of non-saving taxable income means income after the personal allowance is less than 5,000 pounds, then the concept, the rule of a starting rate band is applicable. Previously, it was not applicable because, look at this, whenever in the column of non-saving, your taxable income is either 5,000 or more than that. In that case, starting rate band concept will not apply at all. Repeat, whenever in the column of non-saving, your taxable income is either 5,000 or more, then the concept of the rule of starting rate band does not apply. And let me just make it a little bit more clear. Just one thing. Non-saving, starting rate band. For example, assuming taxable income means income after personal allowance. Assuming income after personal allowance, the taxable income in the column of non-saving, it is 4,000. If it is 4,000, then starting rate band 1,000 is available. If your taxable income in the column of non-saving, it is 2,000, then starting rate band 2,000 is available. If your taxable income in the column of non-saving, if it is 1,000, then starting rate band 4,000 is available. If taxable income in the column of non-saving, it is, let's say, 0, then entire 5,000 starting rate band is available. If taxable income in the column of non-saving, it is either 5,000 or more, then starting rate band is 0. So now come here. In this question, How much starting rate band is available? 2570. Saving income, but starting rate band 2570. Applicable tax rate is obviously 0%. Now we have to look for the nil rate band for the saving income. We need to decide the limit of nil rate band for the saving income. And we know that how much nil rate band is available in case of saving income, it depends on the taxpayer status. Look at this final column. The total taxable income in the final column, it is 27,430. It is actually less than the limit of the basic rate band. Whenever your total taxable income, either it is 37,700 or less than that. So in that case, simply individual is a basic rate taxpayer. And whoever is a basic rate taxpayer gets nil rate band of 1,000 for its saving income. Saving income, nil rate band, 1,000. Now, out of this 20, we have taken 2570 in the starting rate band, 1,000 the nil rate band. Let's see how much is left. 20,000 minus 2570 minus 1,000. Students, I'm getting 16,430, and obviously the 16,430 falls in basic rate band, because look at this, total taxable income is even less than 37,700. So too much space is in your basic rate band. 16,430, applicable tax rate is 20%. Now, dividend income, we know that irrespective of individual's tax paying status, everyone gets dividend income nil rate band of 1,000. Remaining dividend income obviously falls in basic rate band, 4,000. Dividend income basic rate band applicable tax rate is 8.75%. I'm getting 350. 350, 3286 plus 486. Just great. Everyone was having correct answer. Income tax liability. So students, today is just the first live revision class for December 24 session. So I don't want that first class to be very long. What are the topics which we are going to discuss in the next class? And let me tell you. Number one, we will be discussing the concept of adjusted net income. Second very important area, we are going to discuss property income. If we get time, chances are less, but if we get time, then we will also discuss the topic of pension. Topic of pension. So we'll be discussing the concept of adjusted net income. We will revise the entire property income. And if we get time, we'll discuss the topic of pension as well. But a very important point is, and plus, obviously, when we'll be discussing adjusted net income, we will also discuss gross PPC. What are the tax implication of gross PPC? We will also discuss the gross gifted donation. What are the tax implication of gross gifted donation as well? But student, a very important point is actually when is going to be our next class? That is very important. Okay. So the next class is going to be on. Okay, is there any question? Can you please go over the question? Does every individual pay? No, no, no. Only those individuals will pay tax, they have income more than the personal allowance. Because if someone is having income less than personal allowance, so there will be no taxable income. Is this clear? Any income. For example, just an example, okay? Assuming someone is having employment income 10,000, saving income 500, and let's say dividend income just 600. So obviously the total is less than personal allowance. Yes, the final income. I'm talking about this one. The last column. If in the last column the taxable income, just try to understand. If in the last column, this total where 40,000 is written, if instead of 40, if we write 12,570, so obviously there will be no taxable income. When there will be no taxable income, so why would an individual is going to pay tax? For example, look at this. If employment income is 10,000, saving income is 500, dividend income is 600, can I say that everything is covered in the personal allowance? Yes or no? Because I hope it is clear. Because the total is actually 11,100. Am I right? It is in fact less than the personal allowance. Okay, it is clear. Now, if I deduct the personal allowance, in fact, this individual will not be able to utilize entire personal allowance. So 0, 0, 0, 0. So no need to pay tax. Okay, students, is it possible? I just want to, let's do one thing. Actually, I want to discuss the topic of adjusted net income, gross PPC, and gross gifted and property income tomorrow. I think majority, because all these topics are very basic topics, and I think initially you people have seen these lectures. And please, you might have noticed the speed of live revision classes, I would say very appropriate, very slow. It's not fast at all. You might be thinking, is it a regular class or a revision class? Tomorrow's timing. Students, so please you have to cooperate for the live revision classes, because as we know that majority goes for the recording one, but I don't want, at least you guys don't go for the recording one, take the live revision classes. Student, tomorrow we'll be discussing these three topics, and the timing is 9 p.m. PKT, Pakistan time. So I hope to see all of you tomorrow. The topics are adjusted net income, gross personal pension contribution, gross gifted donation, and property income. And the timing is 9 p.m. PKT. Please do not miss that class. So do give the feedback of today's class in your WhatsApp group. So thank you very much. And I want everyone to attend the class tomorrow. Okay. So thank you.